All right. Hello, everyone, and welcome to a special fireside chat at Redefine. I'm Tanawat Sutantivarakun, CEO of Bitasa Thailand, and I will be the moderator for today's sessions. And today, as you can see here, we are diving into the topic of institutional trading 2.0, building the digital asset stack, a topic that could be more timely as institutions demand at the same level of infrastructure and compliance they expect in traditional markets, building reliable digital asset stack is no longer optional. I guess it's more like essentials. And I'm thrilled today to be joined by someone at the forefront of institutional crypto infrastructures who brings deep experience from both traditional finance and digital assets infrastructures. Please welcome Anton Katz, CEO and co-founder of Talos. Hi, Anton. Good to have you here.
Hi, Tanawat. Thank you very, very much. It's great to be here. Thank you very much for inviting me to come back to Redefine. Thanks a lot to our hosts, and great to see you again.
Okay, let's start off, just not waste any time. I guess, Anton, when you co-founded Talos, I believe in 2018, right? And you identified that nearly all infrastructure and tooling in digital assets market was built for retail. Can you walk us through how the institutional infrastructure landscape has evolved since then? And what are the key milestones that have marked the transformations?
Yeah, absolutely. So you're absolutely right. We started building Talos in 2018. It's been slightly over 6.5 years now. Feels about like 30, 40 years ish, in our sector. But when we came into to build Talos in digital assets and in crypto more specifically, we did this in part because we basically said, hey, there's going to be institutional adoption here if we believe that digital assets are going to be a major asset class. If there is institutional adoption, if you believe that, then you have to believe that institutions will be interacting with it like the way they used to interact with any other asset classes. And so my background and the background of my co-founder and our CTO, Ethan Feldman, is really in building these kind of like large scale infrastructure trading systems across pretty much every asset class before. We've done this in futures very successfully, in fixed income, in FX, in treasuries. And so when we came in, what we saw is that from a liquidity perspective, right? So the exchanges, OTC providers, especially on the exchanges side, a lot of it was built from the retail ground up, which is fascinating because really it's it's kind of like the property of the asset class. The asset class has been built from the retail and out, right? And so
Yes,
institutions are kind of like almost like the second people coming into this. Retail was built. It's a lot of the exchanges were built for retail. The bottom line is that exchanges need. Institutions need more institutional tooling to connect and to trade and to invest. And so that's what we set out to build. So 2018, very much retail oriented exchanges, connectivity. We've built the stack that would be used by institutions to connect to those underlying exchanges, later on to OTC providers. And so we kind of like progressed from there. Long story short, what we're seeing today, and there's a couple of interesting milestones you kind of mentioned, like what happened there. Well, I mean, we've seen, first of all, I think the biggest thing is that we've seen regulation around the world starting to materialize around like, hey, how should we think about digital assets? There was quite a lot of retail interest in those kind of assets, right? So the regulators must come in and say like, okay, this is how you protect the and that was very, very, I mean, you know this firsthand. This was very, very different from every jurisdiction to every jurisdiction in the world. And Talos is a global company, Then we've seen a couple of interesting things happen in the United States on the institutional side. So Europe was already kind of like a little bit forward ahead, running ahead. And Switzerland, I think, was one of the first countries that started really thinking about like how to regulate correctly. APAC also had a couple of countries that are looking at it. And then in the United States, it was taking a little bit longer, but then the CME did the first, the first major step for the institutions and said like, hey, Bitcoin futures are going to be traded on the CME. That's a huge, huge deal. Pretty much every institutional investor is trading on the CME. And so that's kind of like, like one of the milestones. And then from there, there's quite a lot of different things that happened, going all the way from starting to talk about regulated custodians that are coming into the space, that are able to actually custody those assets on behalf of institutional players. Like prime broker is starting to get established. The Bitcoin ETF has been a huge, huge factor in institutional adoption, broader adoption of crypto assets, because it effectively gave people that have access to traditional tooling the ability to invest in digital assets and in crypto more specifically. Stable coins are now a part of that trend. So as we're starting to see, like from 2018, a lot of things have moved towards just a more professional environment. And on our side, of course, that's been a huge change. From us in the beginning, when we had institutions and those were crypto natives that come to Talos, they were asking for connectivity. They were saying, like, listen, just give us one API, like a fixed API that we can connect to all those exchanges, connect to OTC providers,
That's the
maybe give
dream.
us like algorithms. Yeah, exactly. And it was like the craziest thing to tackle as a question, because like we've done so much of that in other asset classes, and they were so further ahead in electronification. And then, like fast forward to today, our clients are asking about how do you trade basis, and they're using our spreaders to do this. Our clients are asking about portfolio construction optimization. So how do you rebalance a portfolio with respect to an index? So that's kind of like our portfolio management tooling. Our algo environment is now very broad in terms of the algo coverage. We have transaction cost analysis, we have reporting, we have settlement, we have reconciliation. So today we have this enormous tool set that institutions use, and today we have the largest institutions in the world using Talos. And so, like even the tools that we have kind of like evolved with the market structure, with how the client engagement has been. Sorry, this is a long answer, but it's a lot of years to cover.
No, it makes so much sense. And now you have all of those analytical tools, which is like very useful for like the institutionals, even like sex like myself, would love to use those, right? Yeah, that's cool. But then I think, as you mentioned, right, you have previous background on like traditional markets, FX, commodities, and a lot of things. There's similarities when we talk about like those infrastructures in comparisons tied to the digital assets one, right? But I think myself as well, wondering what is the biggest like differences, like when you compare, when you have experience like in traditional markets in comparisons to like the digital assets.
Yeah, it's a really interesting question, because like I think you're asking literally the questions that we field almost the most from our institutional clients, because they're coming in and they're saying, we understand those asset classes. What is different and what is the same for crypto or for digital assets broadly, right? And you kind of have to think about it. By the way, the most common question we get from our clients is, who should we trade with, which is like a whole different ballgame. But this kind of like notion, just like understanding how things work, is very common. So I would say, look, it's so you kind of listed a couple of different traditional asset classes, right? There's the FX, there's commodities, there's fixed income, there's a couple of others, right? I think crypto specifically has borrowed quite a lot from different ones. Like if you think about like how trading is done, FX trader would generally feel very comfortable in crypto, because a lot of the trading is done in pairs, right? You're trading a US dollar versus a Bitcoin, or a Bitcoin versus a Stellar. You're buying one, you're selling the other one, right? So it's a very familiar environment. Now, the market structure is a little bit more like the early days of some of the other asset classes. It's fairly fragmented. There are different exchanges tailoring to different regions, to different regulatory regimes. Maybe they're providing a separate type of assets to the clients. Some exchanges are phenomenal at stable coins and ability to convert those into local currencies. Some of them are really good about, like Bitcoin and Ethereum. Some of them provide custody services. So there's quite a lot of diversity. So there's like a lot of things that you will find here that, from a market structure perspective, is going to look very similar and familiar to you as traditional markets. The stuff that's different is kind of fascinating. So first of all, this market is 24/7, which is like, again, like you're in the same seat as I am, running a market, like running a company that has 24/7,
Never
operations,
sleeps.
no matter what. Yeah, basically sleep is kind of like, you kind of tend to forget about that for a reasonable amount of time, because a politician can tweet something on a weekend and it's all hands on deck. You're trading, everybody's trading, your clients are trading. And by the way, I mean, that's like, like you and I as regular people, like we can come in and we can say like, yes, maybe I want to buy something, maybe I want to sell something. But institutions don't work that way. They need to think about like risk tools. They need to think about settlement. And this is all like, and we're not talking about like thousands of dollars. We're talking about hundreds of millions of dollars or billions of dollars, which is like what our clients trade every single day, right? And so At that point, you kind of need to make sure that the infrastructure is there to support this 24/7, never stopping asset class. Nobody goes home here. There is no break, right? Then the other thing that's really, really interesting is that there's technology embedded in the asset class. And as a result, like this is also kind of like the evolution of Talos, right? We started as a trading platform, but today we cover pretty much the entire investment lifecycle, all the way from portfolio management, portfolio implementation, to trading, to settlement, to reporting, to transaction cost analysis. You do everything on a pre-trade, trade, and post-trade basis because a lot of those pieces are actually now tied together. And I believe that that's exactly how the world is going to progress. Because today, for instance, I'll give you a more concrete example that's not like as high level, right? We might have a client that has, they're trading with an OTC desk, and they have maybe $500 million or call it $100 million worth of credit with that OTC desk, right?
Mm-hmm.
And they need to get out of a very large position because maybe that client is a lender and they are looking to liquidate asset, right?
Mm.
Generally speaking, so what do? You are selling your position, you run up to that $100 million credit, and then in capital markets, what do we do? Generally, we would wait until the end of the day, we would settle, we can trade the next day, right? Here, you can settle midday if you want to. You don't have to, but you can settle midday. So you say like, hey, I just traded $100 million. You settled. You basically reduced everybody's risk by that $100 million, and now you can trade again. And so your
Mm.
ability to be more efficient about the capital, efficient about the trading is unparalleled to anything that we've seen in capital markets. Ultimately, our belief, and this is how we operate Talos, is that at the end of the game, all assets are digital assets. And that's partially because of this technology that's embedded into the asset classes. And I think that all the asset classes are starting to see that, and they will be migrating to things like blockchain to facilitate operations.
Yep. Absolutely spot on. I totally agree with you. Like 24/7 and settlement is really, really important. And
You know it, man.
yeah,
When was the last time you slept?
yeah, I can't remember that. But then, yeah, I totally agree with you. But then, having said that, right, I'm just wondering as well. Like over the years, you probably have to find like the right path, right? You probably went to wrong path as well. What are the most challenging thing that you face over the past years that you have been with like Talos building it?
Let's see. So it's kind of it changes from from a period to period. I think that there's you can almost divide it into an external and an internal, right? From an external perspective, again, like you would relate to this, like running a startup and generally operating in a startup environment. There's nothing special about me. We have phenomenally talented people at Talos. Like it's
Mm.
really a team, right? But we're all operating in the startup environment, and startups are volatile, right? So you kind of have this volatility of a startup. Then you have the volatility of the entire sector, which is crypto. And crypto has its own volatility. So you generally can kind of like multiply them. And so you need to be in the mindset that you're okay operating in that kind of volatility where you have the volatility from the outside, from the inside, like that's kind of like the stuff to operate. So that's one of the challenges is that you're always operating inside this kind of like a little bit of an unknown, but generally we've been able to navigate that pretty well. And that means that, like sometimes things like FTX will happen and the entire market is going to be down for like 2 years, right? But you're a startup. And at that point we were like, 3 years old, right? And so you're like saying like, okay, we're 3 years old and the next like 2 years you're operating in this like ambiguity. So that's 100% challenging. Today, the challenge is very different. Talos is we're the largest one in what we do by far. We're generally a pretty established player across every jurisdiction. The interesting thing for us, and again, like I'm sure you relate, is focus and prioritization. You are the minute you're working with as many clients as we're working with, you are starting to and like the market structure is developing. You're seeing like true innovation that's happening on the DeFi side, on the centralized side. You're seeing this in portfolio management land. You're seeing like in the yield optimization land, right? Like there's tons of stuff. Lending market is picking up again.
Yep.
Being focused and prioritized in terms of what you are saying yes to. Like what are you working on? Because in terms of like clients will be asking for quite a lot of things. We are trying to make sure that we are completely on the same page with our clients, saying like, and the clients have visibility into the roadmap and they have expectation in terms of like what we will deliver and what we today not focus on. So actually, the vast majority of the conversation that I have today is basically to articulate what we are not doing. Because that's like an enormous set versus the things that you are focused on. You're like, listen, this year, this is what we will deliver, and we will be the best in the market at it. So that kind of stuff, that kind of focus remains, like one of the toughest challenges, I think.
Right, right. Hmm. Um, then I believe that you have presence in over like 26 countries around the world, right? You guys are one of the largest. And one of the questions I would like to know is that whether you see any differences in institutional adoptions patterns, like when you look at different continents like Asia, Europe, US, or Latam or something. Do you see
No,
any
no, it's pretty much the
differences?
same. I'm just kidding. It's yeah, look, I mean it's a very different ballgame. We started in the United States in 2018, but very quickly saw that there is a substantial demand in APAC, and there was kind of like that was the second region, and pretty much at the same time as we started establishing our office in Singapore, we started looking at EMEA as well. And today we have I would say that from a client's perspective, we are almost completely balanced. So we're about 30, 30, and 40. So 30 APAC, 30 EMEA, and 40 in the United States, because the United States just has, the type of institutions that the United States has, like, just generally don't exist anywhere else in the world. But there are fundamental differences between the region and between the different regions, right? Like when we look at APAC is one of those, like when we look at the United States, right? The United States has all these different states, and sometimes we have this conversation around like, oh, like you're doing state by state, like we have clients in different states, and the regulatory is going to be. It's generally not necessarily fully true. Like the United States, you can kind of like treat as the United States, and
Yeah,
even
because in the
Europe
end,
is. Yeah, exactly. It's a like like you will have state specific
yep.
things, but generally speaking, like the FINRA, the SEC, the CFTC, a lot of the regulatory, but the Senate, the Congress, obviously, like it's on the federal level. So you can treat United States as a single region. You can even do the same for EMEA. You can kind of say like,
Mm-hmm.
yes, there's definitely UK versus Europe, but like, look, I mean, there is by design there is consistency across the EMEA sector. Generally speaking, the Middle East is being a little bit different. Then you go to Asia, and in APAC, every country generally has a very different view on this kind of stuff. Like like a Japan would be very different from South Korea, would be very, 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 very different from like what we're seeing in Singapore, what we are seeing in a couple of other jurisdictions. So what is interesting to see is that APAC knows how to lead the way on the derivatives side. It's
Right.
APAC, you can do things that are unheard of in the United States. A retail sector in APAC is very comfortable trading, derivative and more sophisticated
Structured.
instruments, that kind of stuff.
Yeah.
Exactly. And it's mind-boggling to somebody that comes from like United States regulatory zone, where you're like, oh, just the like largest institutions trade that usually, but in APAC, pretty much everybody, they know how to take levers, they know how to do structured products. It's also that if you're really thinking about digital assets and the penetration of like going and taking money and making it more digital, but APAC has done this forever.
Mm.
Like this notion of like being able to pay with a QR code doesn't exist in the United States, but that's been the case forever at APAC. So people just understand that notion a little bit better. They're a little bit more, they're fintech native, if you will, in APAC. And then the regulation is generally thoughtful. In some regions, a little bit more conservative than in some other regions, but you're getting more and more clarity. Then MiCA really harmonized the regulation across Europe, which is
Mm-hmm.
really good. Like I wouldn't say it's like it's perfect. I think the good thing is like the regulators have been in touch with quite a lot of players like us, with us and others, in terms of like, okay, how do we adopt this regulation? But it is a more kind of like concrete guiding framework that allows us to do this. And then
Mm.
Europe tends to be a little bit more conservative, probably out of all the zones, the most conservative on the retail side. So the retail folks
Oh,
in,
that's
in Europe are
interesting.
very happy to work with like their institutional players. And so in Europe, we have a lot going on with the service providers. Service providers in Europe are using Talos to provide their clients with the capabilities of trading, and some of them are very, like they're incumbents in that region. So it's kind of like interesting to see how that's developing, but definitely like forward looking. And then the United States, like if we look at how client adoption is at Talos, EMEA and APAC are generally like this. Like we have a very steady
Yeah.
linear adoption, and then you have United States. United States is like a step function. It's something happens on like obviously we had elections and 2025 looks very, very different for institutions than in
I
2024,
was gonna
especially the ones
ask
touching
about that.
crypto.
Do you see any difference
Yeah,
like after Trump administrations?
I mean it's I wouldn't say it's 180, but there's a substantial difference for sure. Because like, it also the engagement that you have with the SEC, the engagement that you have with the CFTC, these are very thoughtful regulatory organizations that at this point have the direction of how do we foster innovation in the United States? How do we support it? How are we in line with other regulators in the world? And a lot of it became, like it was, I would say in 2023, 2024, there was this notion of blocking and enforcement to an extent, at least from some of the agencies. That is not at all the case in 2025. So all the way from the White House to the Senate to the Congress to the SEC to the CFTC to FINRA to all the, like on the state by state level, there's still some variance, but generally just tons of support. And basically what that means is that some of the largest financial institutions in the world that are residing in the United States can now provide coherent and safe services to their clients in the United States and abroad as well, right? So
Mm,
yes, it's a fundamental difference. Like we are seeing exchange traded products being rolled out. Like we're seeing more and more conversation around staking. We have seen a lot of conversations about stable coins, which is proactive conversation. Yesterday there was notification from the SEC around opinions around DeFi and being very supportive of that, which was like always the question in the previous years. So without a doubt, we've seen a tremendous change in the United States as well. So yeah, the jurisdictions are quite different between them. The good thing is like we have a very interesting vantage point. Like we kind of work with everybody at this point. We are seeing positive direction in every single one of those major jurisdictions. Like yes, there's going to be some individual countries that are a little bit more conservative, but like if you picked a time that you should have been the most bullish on crypto and digital assets, this would be it.
yep, totally agree. That's great for us as well. More
I
adoptions,
can I
more
can
demand,
imagine.
more
Yeah.
volumes.
Of course, of course. And look, I mean, this is a free market kind of mentality, right? It's a I don't think that we need to break every barrier and basically say like it's all, like go forward and do whatever you want. We need to make sure that we're protecting the consumer. We need to make sure that we're protecting the investors. There are bad players out there. And we always say that, like unfortunately, a lot of times the pendulum swings pretty wide. I think enforcement has to be a part of it, just like enforcement is a part of it in every other asset class. But
It's
it should foster the innovation. It should support. It should be reasonable. It should connect with the industry, and that's exactly what we're seeing today. So I'm very, very happy. It's of course good for all of us, and I want to make sure that like we continue focusing on the good players and promoting good practices.
yep, great. I think you have already touched base on the portfolio management system, right?
Mm-hmm.
I was wondering like what actually drives you to make the decisions to actually go to like from like connecting, with like the one APIs connect to like a trading system, ordering management system, smart routing or whatever, right? And
Yeah.
then became portfolio management system. What led you to that decisions?
It's a great question. It's obviously not has not been like a just a mindless transition for us. When we started Talos, we started Talos as a trading platform, first of all, right? And
Yes.
that's kind of like the premise of it. So you're absolutely right. We, like and like I said, right, like the biggest challenge you have is focus because you always have limited resources. So like, focusing and prioritizing is going to be the thing. What we have, however, found that a lot of the clients that came to us for trading were asking for additional services very consistently. And the client said, like, look, we need this integration services. And when we looked around the world, there are places where we say, like, hey, let's not build this, let's actually partner. We actually like it's I won't show you the spreadsheet, but there's literally a spreadsheet. We have this matrix that basically has build, partner, or buy. And it's across all of these different aspects of like what our clients actually do. So for
Mm-hmm.
instance, we are not a custodian. We have zero aspiration to be a custodian. We are partnering with custodians and with custody technology providers. because our clients need the choice. They need to either a qualified custodian or they need like the top, infrastructure provider. But on the on the trading side, we know we are the best. And then portfolio management is again like some of the services we've built and provided to our clients in capital markets. So for us, it was a natural transition. And we've made a couple of acquisitions there as well. We acquired D3X, we acquired Cloudwall, we also acquired Skolem on the DeFi side. Exactly. So for us, it was like, how can we bring our clients an integrated experience that allows them to do more inside the platform in one-stop shop, I'm sorry. And so part of that is actually lessons from capital markets. When you are at a like I come from a very large quantitative asset manager. So whenever you get systems there, like generally what you do is you kind of like string together a bunch of different systems, and you always prefer to have less system and to go to a single system. Actually, you would pay more to go to a single system. But like this is the thing you do, right? You're saying like, well, for data, I need this provider. For trading, I need this provider. For portfolio, I need this provider. For risk, I need this provider. And then you're just writing that glue the entire time to make sure that those things are integrated. And that's the stuff that breaks a lot of the times. Today, especially given the technology is embedded in the asset class, we can bring a lot of those systems closer together. So for us, our portfolio management system has a seamless integration and speaks has a tight integration into trading. And so client can see all their assets in one place. They can book different assets in that portfolio management system. They can move the assets, and then they can trade the assets. And that's going to be immediately in real time reflected in the portfolio management system. The same holds true for things like reconciliation. Our clients need to know that what the street is showing them and what they have is correct. A lot of times people just trust the street. And they basically say like, well, the exchange said that this is the trades that I have. The OTC said that this is the positions that I have. But in capital markets, we don't do things that way. In capital markets, you always have your own accounting that you're basically saying like, hey, what if there's a mistake on the other side? Like I will never catch it if I'm dependent on a single source. So we have that system. We have the reconciliation that allows us to reconcile your data versus other people's data. Then, like immediately you think about like, what else do our clients do? Well, they settle their trades. So what do you need to do for that? You need to make sure that you can move assets around. The minute you reconciled and you're saying like, okay, this is actually how much money I owe them and this is how much money they owe me. We need to be able to do that programmatically. We need to do that automatically. So we're constantly thinking, what do our clients use? Where do our clients spend time? And what can we provide them in this one-stop shop? And that's why, portfolio management was the second thing we did. We have quite a few other things that are coming down the pipe. There's going to be some announcements this year about other major verticals that we care about. But for us, it's all about building Talos into a one-stop shop, but not locking people into it. Our clients always have the choice. Who do they work with on the custody side? Who do they partner with on the liquidity side? Like any other data providers, any other, anything basically, any other post-trade providers. We have seamless integrations. We partner with multiple post-trade providers as well. So even if we have something on our side, it doesn't necessarily mean that our clients are looked into that. Clients have the choice to work with whoever they want.
Right. That's great. So it seems that you're just trying to like put everything that like customers would need and they can just choose whatever, right? But that also means you have to like perhaps build a lot of things, acquire a lot of things. Like so when you look at that, right? Perhaps your spreadsheets that you were talking about before, like when do you decide to build and when do you decide to actually acquire a company to do so?
That's a good question. So there's a couple of things that generally go into that conversation. So we earlier on we said that part of our strategy is going to be this inorganic growth, which is just like a fancy way of saying that we are happy to acquire companies when we see that it's going to accelerate things. But the things that matter to us is just thinking like across what vertical and what acceleration we can get from the acquisition, right? So some acquisitions, you look at them, and generally we don't do we don't do acqui-hires. Like that's not necessarily because like we have really good talent and we care quite a lot about talent. So we are very, very, very methodical about the people we're bringing to the companies. But if we see teams that have developed standalone solutions that are a little bit better served under the Talos umbrella, that can connect them to distribution and can accelerate our growth in a particular vertical, especially if it can, cement us as the leader of that vertical and provide our existing clients with better services, that's generally would be it. So you constantly think about like, hey, how long will it take me to build it? And does it matter that I take that time? Like, for instance, if there's a vertical that we think
Yep.
is not going to be material in the next like 3 years, probably buying it right now doesn't make sense, right? Like we would
You
probably
have
just
time
say
to
like,
make
hey,
it.
if we really believe in it, exactly. Like we can do it, we can build it. And then, but where we see acceleration, so for instance, we look at solutions that have a good steady ARR, so they have a good steady revenue, so they clearly already achieved market fit and market traction, and like or we have very 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 strong confidence that there is market fit in there, and
Mm-hmm.
we just basically say like, hey, there's quite a lot of optimization we can do by plugging them into the Talos services. They can both connect to our existing services and to our clientele, and we are obviously pretty broad in terms of the clients that we have. That's where we say like this might make sense, and it makes sense usually for both sides, right? It makes sense for
Mm.
for the team because they get access, like it's basically supercharging your capabilities. Makes sense for us because like we now have another vertical, a better effectively a better platform for our clients and a more coherent solution overall.
Right. Okay. Cool. And just now we were touching base on DeFi, right? Skolem, if I remember correctly,
Yeah.
right? You guys acquired that. Um, but as an institutional infrastructure player, right? So you would look at like compliance, security, and all those, right? But for DeFi, it seems like those sort of security, those sort of compliance, it's not really in the picture in comparisons to like those centralized one. So my
Yeah.
questions would be like, are there any requirements or something in regards to compliance security when it comes to DeFi?
Yeah, 100%. So, I mean, that's actually, there's some technical aspects of DeFi, namely, like some of the speed and some of the capacity and scale and all that kind of stuff that is also causing institutions with a pause, like the larger institutions, pause in adoption.
Definitely.
But generally, those are being kind of like, they're being resolved. Like we're seeing, either existing blockchains being updated to have a little bit more, like whether it's resiliency or scale, or we're seeing new blockchains come up that are more mission specific. So from a technology perspective, I think it's just a matter of time until we are kind of like almost like getting to in parity type of situation. We're also seeing some hybrid approaches where it's like part DeFi, part centralized. Like maybe the order book
Mm-hmm.
would be centralized, maybe like the settlement is going to be DeFi, which is best of both worlds in my opinion. But you're absolutely right. The largest thing, especially in some jurisdictions like United States, is going to be compliance. It's
Mm.
like our clients, if you're trading DeFi, our clients can't afford trading with a sanctioned entity. So
Mm.
there's a reasonable amount of emphasis right now on the tooling for that, either on the pre-trade or on the post-trade basis. So we partner with a couple of providers there. We're also doing a couple of things ourselves. But the idea of approaching a service on DeFi that is actually, has a more of a kind of like a pool that is a little bit of a known, right? So like a
Yep.
whitelisted pool of players, or you can at least take a look at the liquidity pool and you can say like, are there bad players there? The good thing is that in DeFi, everything is in the open. Like you might not
Mm-hmm.
know exactly the individuals that are playing in this, but you can see what entities or you can see the wallets that are participating. And now we have tools that allow us to investigate those kind of walls, to understand the liquidity behind it, if it's specific liquidity. So generally speaking, like I think DeFi is moving very rapidly into the zone where people are getting a lot more comfort around it. And then there's also very DeFi specific things. Like for instance, in the
Mm-hmm.
United States, you see that there's quite a lot of chatter right now about staking. So you have an ETF that is an Ethereum ETF, right? But Ethereum has a huge staking component to it. And actually, there's
Yep.
quite a lot of money that you make by staking Ethereum. How can you basically say like, hey, it's you can you can keep the Ethereum ETF, but you can't get access to staking. You're effectively saying it's like, hey, here, buy a treasury, but you don't get the interest rate, right?
Mm-hmm.
And so, but the questions that the regulators are asking about staking of the individual issuers are real questions. Those are real market structure concerns. But ultimately, like that's another portion of a decentralized finance that is now, a lot of the institutions are getting more and more familiar with, like how do you do it in a safe way? How do you provide liquidity correctly for staked assets?
Mm-hmm.
How do you do the accounting correctly for all the accumulated? Because like this is literally just money that like in a very abstract way, you can think about it as like money all of a sudden appears in your wallet. And so you kind of need to like make sure that you have the right
Exactly.
reconciliation and the right accounting process behind it, right? So generally speaking, like, yes, there are still some concerns with DeFi. It's not insurmountable. You are walking into a domain where some of the compliance is going to be addressed, some of the pre-screening is going to be done, some of this aspect of liquidity is going to be addressed. And then you're kind of like, like there's still going to be questions around technology risk. And I think that
Yeah.
that's where I would, if I had like a magic wand, I would say like regulators have to think about that as well, because not like, DeFi is primarily code on chain, right? So you have some protocols that are very, very established and they had billions of dollars locked in and it's, like, and run through them on a daily basis, sometimes a lot more than that. But you have some of the newer players to make sure that those smart contracts are going through correct validation, that we feel it's safe to lock assets there, that we have some sort of tooling that allows us to see like where something is unstable. Those kind of tools are still, like I would say it's a little bit early. That still needs to happen for full on market adoption, but like we are 100% headed in that direction.
Right. Okay. I think I'll move on to like something of the future visions, opportunities. I'm just wondering, what's your perspective on like tokenizations of like real world assets? There are a lot of
Yeah.
people saying that it's up and coming, right? And by 2030, it will reach like $600 billion worth. Like, how does Talos position yourself? And also, yeah, I just would like to know your perspective, like on your personal level.
Yeah, absolutely. Look, so as I mentioned, right, my view and our view as a company is that ultimately all assets are digital assets.
Yep.
And I'm not just saying that because like, like, oh my God, this would be so nice. It's because a lot of us and pretty much everybody at Talos comes from capital markets. My experience and Ethan experience is not unique. Everybody that we hire generally comes with a background in capital markets. We've done this in
Mhm.
traditional markets. A lot of us have like I'm an engineer and Ethan's engineer. We built a lot of these platforms before in capital markets. So I can just tell you that when we're looking at this new domain of digital assets and RWAs and tokenization in general, we think that there's an enormous amount of benefit there. And I believe that it's going to change how capital markets actually work. So generally speaking, for Talos, if you will, there's like 3 stages to the company. The
Mhm.
first phase was like when we started the company, we said, let's build the best trading technology platform possible for our clients, both the buy side, so folks that are using our technology to trade, and the sell side, people that are using our technology to offer trading to their customers. And that's a huge portion of our business today, right? We power OTC desk, we
Yep.
power, like institutional brokers, retail brokers, and so on and so forth. We have like a full brokerage out of the box solution for those. But that brought us into the second stage of the company, which phase two for us is really this end-to-end trade life cycle.
Mhm.
Build Talos into one-stop shop, but still the focus is on crypto. The third phase of the company, and we've been saying this for the past like 5 years, the third phase of the company is to do exactly what we do in crypto, to do this in other asset classes. And the good thing is like, we are doing quite a lot to get there, and we are doing quite a lot of things in other asset classes to make sure that our platform can seamlessly connect traditional institutions to this kind of like new domain. Because the last thing you want is you want to come into every bank in the world and every hedge fund and every financial institution and asset manager and say like, hey, you now have to change everything because there's this new asset class and we believe that things are migrating to this new technology that's going to be underlying all these asset classes. That's not a winning proposition. But our job as a technology provider, as a vendor, to be able to connect, to be the bridge between the largest institutions and the underlying new innovative technology behind all these other asset classes. So today we work in crypto. We also work in FX. So we have full FX capability and we provide our clients with the ability to trade FX versus crypto and provide their customers with the ability to do so as well. We have more and more on the equities side as well. And we're obviously quite involved on tokenization. So we are looking at what is the best way to partner and what our clients actually need from a tokenized perspective. Trading is like bread and butter for us. So how do our RFQ system evolve with respect to targeting those kind of like tokenized assets? But like how do you think about it from a portfolio management perspective? How do you track the movement of those assets? Like remember, if you have a commodity, right, or you have like pick any asset class you want, the ability to move that as an investor is very, very limited. It takes quite a lot of time, requires quite a lot of players. When you have a digital asset, you can move it from here to the other side of the world in 10 minutes, generally speaking. That's a huge, huge paradigm shift, right? The systems
Definitely.
that are need to look at that are very different than the systems that exist today in traditional markets world. So you can't look at just trading. You have to think about trading. You have to think about post-trade. You have to think about pre-trade. The entire thing is connected. So we are doing quite a lot there to make sure that we are the bridge as institutions migrate to this new tokenization world. We are the bridge, the conduit that allows them to do that seamlessly.
Right. Great. I think we have time for the last questions. I think I myself want to know this, and I think everyone here that listens probably wants to know this as well. So finally, Talos continue to expand and evolve. So what's next on your roadmap, and what's the upcoming product launches, partnerships, or anything interesting that you would like to highlight, or what you can highlight here?
So it's a great question. I would say, look, the things that matter to us, again, it's going back to the basics, is continuously progress as a one-stop shop for our clients. When we're seeing into like what the growth of Talos has been, we generally grow in kind of like a couple of different domains, right? We grow in terms of our market share and just the number of clients that we have on the platform. The market is also growing, so that's pretty positive. But we know that we're beating the growth of the market, and that's one of the things that we're tracking. The other thing that we're seeing quite a lot of growth is growth with existing customers. We're seeing quite often that customers are coming in for trading, and they expand into portfolio management, to data, maybe into settlement. We're seeing clients coming in from every one of those verticals and expand to others. So that's one important thing. So this notion of continuously providing more coherent services as a one-stop shop, super important to us, and that's going to be the future. But like from an immediate focus, portfolio management remains very high on that list. We're starting to see quite a lot of traction and interest in that side of the platform, and we still have building to do there. Like there's no mission accomplished banner here. This is like, we have work to do. But the good thing is that we have a very good and strong, coherent set of our clients that's providing quite a lot of feedback and using these tools. So I think, like we're tracking the adoption there. DeFi is becoming a bigger and bigger avenue for Talos. The interesting thing that we're going to be talking about in the next probably couple of quarters is going to be how we are working with stablecoins and stablecoins providers, stablecoin issuers, and the work that we're doing there. And there's a couple of things that are going to be there. And then there's a couple of newer verticals that we're looking to really materialize in Talos, again, to provide our clients with more coherent experience. Stay tuned. We're hoping to be able to talk about that pretty soon. So look, I mean, for us, it's in the grand scheme of things, and thinking about like how do you go after the like the next $1 trillion of institutions coming into this domain. We, in the past like 10 months, we onboarded asset managers that total in AUM they're totaling about $18 trillion in assets under management. That's of course all like a portion of it is crypto, but now those assets can get access to crypto, and that's a huge change from previous years. So we are looking at this number, and we think that there's enormous numbers behind that as the market progresses. So for us, it's thinking about like what other services we can do today, thinking about what kind of other asset classes we can add to the platform in the future.
Yeah, that's a good way to put it. In the end, you're just like one-stop shop.
That's the look. I mean, it's just again, like it's just lessons of the past, right? I can tell you, as somebody that bought this infrastructure before, I will always give preference to something that is one-stop shop that have multiple of the verticals that I need integrated, so I don't have to think about like how all those pieces actually work together. I will pay extra for that, and I will have a better experience as a client. And it's not just better experience, like, oh, like it just works. It's also the safety aspect. When you're moving billions of dollars every single day, you kind of like, the margins of error have to be like super, super tight.
Yep.
Like you can't afford to have some systems that are not working along with other systems, and that's kind of like where some of these problems arise. So a lot of times, like having a one coherent system that is responsible for a large portion of our client's operation, that's been the winning proposition for quite some time.
All right. Thank you for all the insights and deep diving into the topics. Yeah, thanks very much,
Thank you so much for all the questions, man.
Anton.
And
Yeah.
thank you for doing the research on Talos. Those are exactly the kind of questions that are top of mind as well for us. So thank you very, very much for being an amazing moderator.
Yeah, I really want to know like all those things that I did some research as well. Yeah,
You could
now
just call
I want to explore. Oh yeah, can I get your number?
always. I will send it to you afterwards. No
For
problem at
sure.
all.
Thank you, thank you.
Thank you very much for having me. Thanks a lot for all your
Yep.
questions, and again, big thanks for to Redefine for having me for another year. We'll see if we said something bad here, and we'll see if we get invited again next year.
Yeah, we'll see. Thanks a lot, Redefine and SCB 10X team. All right, do
Thank
we
you,
just
SCB
stay here?
10X.